So there are two rules, okay, which we surround these IB and IS signals with. And the first rule is the high of the IS bar and the low of the IB bar become immediate stop losses with a small filter. The second rule is all these signals are valid, okay, for 10 bars. So if they came in about 30 minutes, they are valid, okay, for the next 300 minutes. So we always define our signaling in terms of time. One signal, okay, which is come in on a 30-minute time frame or even on a 5-minute time frame is not valid forever, right? So a lot of traders, okay, what they do is once okay, they get a signal on whichever chart or whichever indicator, okay, they are looking at, they expect, okay, that signal, okay, to last them for a lifetime. That's not how the derivative market works. The derivative market is very, very time defined. Time is a very, very critical element of the way we work in our markets. So every single signal, every single message, okay, which comes to you has a defined time to it, an expiry date. And for us, that expiry date is 10 bars. So after that expiry date, that signal is no longer valid. So we had another IB bar which came up over here, right here, 24,236, and again, okay, we saw movement, okay, above this 24,236. So this was activated, and 24,174, okay, became the stop of the trade. So two things are happening over here. One is, okay, your bias, okay, is becoming clear. If you short, okay, when you see a IB bar, your short calls or your long puts or your short futures, you are losing money, okay, because price is going against you. So first thing, okay, you prevent yourself from going wrong. And 90% of the traders, okay, do lose money because they have no idea when to be long, when to be short, when to be sideways. So first and foremost, okay, what you're doing is you're eliminating mistakes from the market. You are eliminating wrong choices from the market. You absolutely should know, okay, what is the correct bias. So what we have to do is like, as we head into a new calendar year, the first message, okay, which I give, okay, to the team which is trading with me is not to understand, okay, that there is only one way in the markets. There are actually, okay, three ways to trade a market: the up, the down, and the sideways. And the more open you are to these three possibilities of trading a market, okay, the better will be your results in the market, because you're opening yourself to a lot more opportunities. Now, what we advise is be open to the movement of the market, be a follower of the market, be a person, okay, who knows and understands, okay, where the bias of the market is, where is the dominant trade in the market, and trade alongside it, right? So today, okay, what we're going to do is we're going to try to understand the market in terms of where the signaling is via order flow. Today, okay, we're just going to train our focus, okay, on understanding one element of that chart, which is the IB and IS signals. And the easier way to do it for a number of traders is to focus, okay, on that. Just let me explain to you that whenever these bars show up, they tell you, okay, that there is a change happening in the market. Some people, okay, who have come in and pushed in aggressive market orders, like all these greens over here, large sizes, and this bar has to be treated very, very differently, okay, from the other bars in the market. So I'm just focused, okay, on the role of these IB bars. If I'm just focused, okay, on these bars, okay, where these IB bars have come, I'm opening myself up to a lot more possible, probable, good trading opportunities in the market.
Good evening, everyone. Good evening, all. A quick sound check. Great. Welcome to this Monday 5 p.m. session. And we have an important one because we have a holiday midweek and then we have the monthly expiry on Thursday. So let's first do a recap of what we have done on the weekly time frame in spot, and then we'll move on to the futures profile, daily profile chart, along with the order flow of last 2 days. So this is the weekly report which is put up on the website under the forum section. And last week in Nifty, we opened with a gap down, but the gap down did not give any range extension lower, and we got back into previous week's value. So what we did in the next 2 days was it was a slow probe higher, but on Wednesday you can see how we made the C side just below this weekly VPOC of 23069. So we have always maintained in these sessions when we are looking at the weekly chart, especially the spot ones, our main reference in the spot chart would be the POC, point of control. So we are bearish below the point of control and we are bullish above the point of control. So when we got this C-side itself is a setup which we take with lot of uh, doubt, because the C-side always gives a fake move. We call the C-side a dhoka period. So when we had that C-side making a new high and stalling just below this weekly VPOC, we knew that the buyers were losing control. And slowly what the sellers did, the next day they made value lower. They left a VPOC here at 22944. And then on Friday we saw initiative selling coming in as we saw this long liquidation B-shaped profile. This was a long liquidation profile because we had seen some buying at the open of the week in the gap down. The sellers did book profit and we had some buying because we saw this A period buying tail. So that is the reason we formed a balance in the second half on Friday, leaving a B-shaped profile. So all said and done, this was not looking good for the buyers at all. And this initiative selling tail was our reference. And what we did on the weekly was, you can see how we have formed a nice Gaussian curve. Gaussian curve is a nice balanced profile, and when it comes on the higher time frame, you can expect a good move away from the value in the POC. So when we closed below the value of this Gaussian curve and the weekly profile itself was a neutral one, we made an attempt to probe higher. We got rejected just below the weekly POC, and then we went on to make new lows for the week on Friday. So the weekly profile was a neutral one in a narrow range of just 330 points. So what we had done, we had a good move in the week prior to last week. That is the reason the imbalance of the week before led to a balance last week. It was a neutral profile and we formed this prominent POC at this 22900 level. 22894 is the weekly POC of last week, and we made a move away from that weekly POC with this initiative selling tail. So on Friday itself, it was very clear that this prominent POC is giving a move away, and initiative sellers are making a mark over here. So the small brief which we had was it was a close below value, hinting at resumption of the downside imbalance in the coming week towards 5th June. 5th June is a very important profile because it came after that 4th June election results day, and where we left some good buy side references. So 22516 was one such reference, which was the immediate level to watch for us in for today. And below that, we have the VPOC from that profile, which is a 22335. So as long as it stays below 22810, which is the value area low of last week. So accordingly, we had the hypos marked up. We had the first hypo on the upside at 22810. If we had opened above this, we could have seen a 80% rule in this. In fact, that setup is on for the rest of the week also. In case any day we get a look up above this 22810, which is the value area low of the previous week, we have a very good chance of the 80% rule coming in, with this 22894 being one important objective, because that will act as a magnet because of the prominent POC it is. So what we did today, we opened below this. It was a lower open, and we went on to tag all these lower references, making a low of 22518. I'll just open up the weekly profile chart and see what we have done today with respect to last week. So you can see how we have moved away from this weekly Gaussian curve with a gap down. And in this, I'll just increase the PPR size. In this, what we did, we made a seaside today, and seaside, as I had already mentioned, we take it with a little bit of doubt, and that is why we got this bounce. But this bounce higher, you can see, got stalled right at this halfback. 22620 is the pullback high in the F period, and that also means we have the selling tail of this week from 22620 to the high of 22668. Not to forget that this is a gap down, so we have an invisible tail, in fact, all the way till 22720, which was the low of Friday. So that 22720 now on the higher time frame, on the monthly chart, on the February chart, is an extension handle which is caused by sellers. So the sellers are already loaded up and they cause this extension handle in form of a gap down. So this 22668 and 22720 would be the references on the upside for the rest of the week, which is tomorrow and the expiry day. So 22620 is the selling tail, and we have the VPOC at 22573. So now even the references will start to coincide because we are approaching the expiry. So both the spot and the futures will almost start overlapping. So we have formed a B-shaped profile for today. So today's value would be the reference for tomorrow. If we are below this 22542, we continue to remain bearish. And 22573, if we are above this POC, we can look for a test of this 22620 and 22668. So that is how we are placed in the spot. On the lower side, we already have that objective of 22335, which is the VPOC from 5th of June. So in fact, we can just go back to June and have a look at that profile to see what we had done there. And okay, this is the monthly chart. So I'll just open up the weekly chart, daily chart. And we will go to the 5th of June's profile and see these references which were already marked on the weekly report. 22480 is the POC, monthly POC from May. So that will be one important reference on the downside below this 22516. So this is the profile of 5th of June. You can see how on 5th of June we opened with an initiative buying tail. We left an extension handle at the initial balance high, and that extension handle came in the D period. So C was silent that day, so it was very clear that it is we can get a directional move. So where we have stalled today is right at this KTPO's halfback 22516. If we break this, then 22480 would be one minor reference. Then we have the scene of crime at 22445, and finally this VPOC of 22335, which I was talking about. So this is what is there on the downside for the rest of the week and tomorrow also. So we'll just need to see if we get accepted below this 22516 or we stay above the today's POC of 22573. So we stay above 22573, then we are looking for a test of 22620, 22668, and then this extension handle of 22720. So as long as we are below this 22720, the outlook for this week would be bearish to neutral. We cannot be bullish until the time we get back above this 22720, and definitely this 22810, the weekly value area low. So here we are watching the daily chart. So you can see how on the daily chart we had already got the indication on Friday that it is moving. The balance is giving way to an imbalance. I'll show this to you clearly on the profile Nifty future profile chart also. So you can see how on Friday, and we were all discussing this even in the VMR, that how the up move was getting stalled at this value area low. So the G period pullback high, which we made on Friday, was getting rejected with the entry of this value. So that itself was telling us that the imbalance which has started, the initiative selling which was seen at the open, will definitely want to take this down, and he is defending this zone. So this is how you make use of the market profile charts, and you understand the structure, and you see which are the references, what is happening, and where the initiative player is coming, and where the initiative player is defending his zone. So this is as far as the spot is concerned. Let us have a quick look at the Bank Nifty chart. This was today's hypos, and today's hypos, you can see we never got back above this 22810, and we have tagged all these lower VPOCs, lower hypos. 22518 was the low today, and 22516 was our lowest objective. So this has been done. Let us now move on to the Bank Nifty weekly chart. Bank Nifty also last week, what we had was a lower open, but then again we did not get any range extension after the initial balance. So, but in Bank Nifty, what it did was we had a small spike into the close, but we were stalling below this weekly VPOC. And again on Tuesday, we saw an initiative selling till right below previous week's POC. So that was telling us that the sellers are still trying to hold this level. In Nifty, it was very Nifty, we were well below the weekly POC, but in Bank Nifty, when we are trying to make a probe here, it was stalling. We finally got this open drive up, and we moved higher on Wednesday, but then again we made the seaside extension which was not taken out. So that was telling us that the sellers are coming back, and after this P-shaped profile, the next 2 days made lower value, which forced all these buyers who had come in on Wednesday to liquidate. This B-shaped profile on Friday was telling us that all these buyers have been taken out. So if we would have been below this POC of today, of Friday, we would have been looking for more downside. So in Bank Nifty also, we had a similar, it was a normal variation weekly profile on the upside, but value wise we formed lower value. So, and we closed around the prominent POC of 48935. So if we stay below this, we were expecting more downside, and these were the hypos for today. You can see how the we were below this, we opened lower in Bank Nifty also, and we went on to almost tag this weekly extension handle. I'll open up the weekly spot chart of Bank Nifty, and we'll see on the weekly chart where we have made a low today and why it was important. So you can see this weekly profile from 27th January to 1st February. This is where we had made a gap up, higher open after the RBI announcement. And that is where we had left. This was a DD profile, and the base of the DD was at 48273. This is where we have made a low today. 48281 was the low, I think. So 282 was the low. And this previous demand zone for now has been respected. We have left a very small A period buying tail. So that is telling us some demand is coming back here. And what we did was we made an attempt to probe back into previous week's value, but we have not been able to sustain above it because we only got one LTPO there. We will need to get accepted above inside this value for the 80% rule to play out. This definitely would be one objective, the prominent weekly POC of last week. And then we can look for a tag higher, fill up of this zone and tag of this value area high. So Bank Nifty has been the more bullish of the two index for today, simply because we have not got any selling tail and we have closed the gap and we have taken support at one important zone. So what we, and in Nifty we have made a V-shaped profile with an A period selling tail, but in Bank Nifty we have got a buying tail. So both the profile, both the index are giving us contrasting profiles, and we made an attempt to spike higher, although we were not able to close in at highs. We are still above the POC, whereas in Nifty we have closed below today's POC. So Bank Nifty moving forward, again today's POC would be the immediate support, and then if we are able to sustain above this 48741, then we are looking for a tag of this weekly VPOC in the coming sessions. On the downside, if we take off this extension handle of 48273, then we are looking for a test of a VPOC, which we have here 48160, and then we have a reference at 48041, and then if we below that we are looking for new swing lows. The lows which we made in January in Bank Nifty was where we have the value area of the year 2024. So if you look at the yearly chart, which is possible and which we need to also keep doing once in a while, the lows of 47844 is not just a random number. If you open up, okay, we needed the Bank Nifty yearly. So we have the option at the bottom of the time frames. We select the Bank Nifty spot and we go to the yearly calendar year, and you can see how 2025's profile is a nice balanced profile, and you can see where the lows of this profile is right at the value area low of the 2024 year. So what we have done from January till now is fill up this zone. We have stayed below the POC of last year, so which is not a good sign, but we have taken support right at this value area low on the yearly time frame. So this will be one important reference, and if we start to stay below this, then we can look for more downside in Bank Nifty. It becomes bearish. So we are at an important zone, so we will need to see how this shapes up. And yes, this POC of 49317, which is the developing POC of 2025, would be one reference going forward on the upside. So that is one example of how you need to know what is happening on the higher time frame. So we will update these hypos for tomorrow in this report, and that is how we are placed in the spot. Let us now move on to the futures chart and see what the Nifty futures was doing. So as I was mentioning, you can see how in the Nifty futures we have the settlement from Friday to Thursday. So this 5-day profile, in fact, is a weekly settlement profile, which started on 14th of February, which was a Friday, and closed on 20th, which was a Thursday, which was the settlement. So on the settlement day, you can see how we have closed right at this prominent POC of 22943. And on Friday, what we did was we made an attempt to probe higher, got rejected just below this POC. 22940 was, I think, the high on Friday. We were not able to tag this, and we saw in order flow, we saw volumes increasing in this rejection. This was an open test drive down, and we went on to form lower value. So similarly, as we saw that in spot, you can see how the pullback in the E, G, and H were stalling right at this value area low, 22868. I'll switch on to the order flow charts in a bit, and we will see these references even in the order flow chart. But here the market profile showed us that the imbalance has come. It is moving away from this value. First, we got rejected from this POC, and then we were showing signs of rejection at this value area low. So this was very clearly telling us that this is being rejected, so there is more downside to come. And that is the reason when we made this B-shaped profile, the order flow showed us some good reds which were climbing into the close. And those were the reds which caused this gap down in the morning today. And after the gap down, we saw some profit booking. We saw this seaside giving us a bounce. And then again, giving us new lows. In fact, we have similar lows on the downside. And as I was telling you, will see the levels in spot and future overlap because we are approaching expiry. This low of today is right where the POC in spot was, 22573. So they'll get more and more in sync as we approach the Thursday expiry. But whereas it will be equal, the spot and futures will almost be in sync. The levels will be the same. There'll be not much premium left. So we will have to wait and see what will happen. So in the futures, we have seen how we got this open type showing us imbalance starting, how these pullback were getting rejected right at the value. And let us have a look at the order flow and see how the order flow showed us on that day. So I'll switch on to the 30-minute order flow chart. And this is Friday's order flow chart, 21st of February. And you can see how even on 20th, we had this big reds into the close. The POC was here, 22943. And on Friday at the open, we opened lower, made a probe higher. But in this higher probe, we got stalled right at this POC and we saw some big reds coming in. You can see the cot was red and then it was followed up with a break of this 22874, which was an extension handle, and the red cot continued. So here you can see these bounce which we got in the E, G and H. They were stalling right at that value area low of the composite. And here we had this 22874 which was the extension handle which was not tagged. So this was telling us that the seller are in control. Yes, they are booking profit and there you do have some laggard shots being forced to exit, because you can see this 1265 red has come at a wrong place. So just because the trend is down does not mean you can just blindly go short anywhere. You need to know what location you need to short. So this red definitely was not a good entry and he must have been forced out above the VWAP. That is the reason we were getting this bounce that day. Same thing, even in this 115 period, you can see some reds getting stuck at the lows. When you're getting reds and RBs at the lows, you know that it is not a good sign of continuation. But when it is giving you a pullback to VWAP, you can see how in this 245 bar, you've got a trifecta of reds at VWAP. And then again, we saw this 1490 green, 1315 green. These reds were, reds. And these reds were also visible to us on the 3-minute order flow chart. So I'll show you one of the put charts of that day into the close, how reds were coming up in Nifty futures and how the put was showing us an IB plus IB signal on the 3-minute order flow. So that is where you can make out. The structure was very clear. We were getting rejected from the value area low of the composite. We have got an initiative selling tail on Friday. So we knew that the imbalance will continue. More so, the lows were not secure. We had similar lows in spot. In fact, it was almost same, 22720. In futures, you had a 4-point difference. So definitely these lows would have got repaired. So it was a very good case of getting into put longs at the close on Friday, looking at the order flow. And what we did today in the morning was opened lower and the reds continued. We didn't see any demand coming. Yes, there was some profit booking, but overall the cot remained red in the initial balance, the A and B period. It was only when we made the typical C side, and this 22594 was one important reference because that is the 180R objective on the monthly time frame from the highs we made in February. So we have achieved one important milestone on the downside. So after that, here this is where you can see the seller number is coming down. 8 and 0 are the sell side numbers here, and this is a C side which we don't trust. So the C side not just gave VWAP, it gave a bounce above VWAP, but in this bounce higher, we were not able to sustain above this 22655, which was the POC of the A period. And even though the cot was slowly turning green, and the green cot has a story in itself, because this is the expiry week, you need to be aware that there will be many rollovers which will be happening. And just because there is one holiday in between, there is all the more cases of the rollovers to get spilled over on the other days. Generally, Monday has the least number of rolls happening, but because Wednesday is a holiday, there could have been some rolls which had come in today. In fact, when we were in the VMR, we saw some big 1,000 lots green in the February order flow. Immediately when we checked the March order flow, we had a similar red on the 3-minute there. So it was very clear that that particular big number that LLT was a roll who was covering in February and initiating in March. So you need to be aware about the COT and the LLTs for this week till Thursday, because most of these LLTs could be rolls. So what we can do is we can just open up this 2-window mode and have the March order flow chart along with this. So whenever you're getting big LLTs on the 3-minute, you just need to compare about how the LLTs are matching with the February. So that is the think that you don't need to get carried away by some big green LLT which is coming in. I'll just show you that example which we saw today in the room of that 1000 green in the February series. But immediately when we saw the March one, we saw a red over there. And these roles are the rollovers which have been carried by the big players are not for 1 day or 2 days. They are planning it and they are executing their orders based on the entire series. So these roles will keep coming in and they'll keep coming in at different levels. This is the one. 1242, you can see this 1328 red. And at the same time, we saw a big green. This. So 1073 green. If you are not aware about these rollovers, you will think that this is a big initiative buyer, big buyer who is coming in the Feb series. But immediately when you see the March series, you know that at the same time you've got a big red over here. So this guy is a short who is covering his position in February and initiating it in March. So this is how you will have to look at both Feb and March for this entire week and make sure that you are in sync with what the COT and the order flow is showing you. So even if the COT is showing you green in the Feb, it could be mainly because of shorts covering their positions. So what we have got in February is a IB30 bar. So IB30 is come in February, but in March we have not got any IB. So that tells us that we need to be a little bit careful about activating this bar on the IB30 because we are closer to expiry. We'll need more confirmation in both. So if this gets triggered tomorrow, we need the COT to show green, not just in February, but also in March. So that is where you will need to be in sync. Just IB30 in the closing expiry can just mean because there are more greens because the shorts are covering. But if you're not getting similar greens in the next series, then you may not get a follow-up. So make sure you're doing this for the rest of this week and you don't miss out on whenever there is a roll happening in the series. So that is how you look for this. And if I just take you back to the 3-minute order flow chart of Friday, the closing bars was showing us good red even on the smaller time frame. So you can see how we got this 1000 red at 254, which was followed up by another 1049 red at 309. And then into the close, we were getting more reds with the IS bar. So if you quickly move on to the any put chart, and you can watch several put charts because we have this facility of having a 2-window mode, having a 4-window mode, having a 6-window mode. So if you have good screen space, if you have got a bigger screen, you can also go for the 6-window mode, which is there on the right, and you can look at 3 in the money options, call options on the top and puts on the bottom, however, whichever suits you. And you can see which is showing you IB bars, which is showing you IS bars. So 22,800, I'll just quickly enlarge this and go back to what we are talking about. 22,800 put into the close on Friday. You can see how we have got this IB plus IB. And if you see the order flow chart of that day, and because we were already talking about how Nifty futures was showing us reds, the structure was showing us that the sellers are in control and they are starting an imbalance, how we need to we need to make sure that we are in sync with what they are telling. So you can see this is the 22,800 put. We closed right at 22,800 in spot. 22,759 was the close in spot. So you can see how we got IB plus IB bar here. So this was in sync with the futures. So we have always maintained the signal which you get in both. Nifty futures is giving you a IS and put is showing you an IB. That is the best signal that will give you good moves. So that is what happened on Friday. We saw a couple, three of the 1,000 lot sellers reds coming in from I think 250 to the close with an IS bar into the close on 3 minutes, and that was followed up by this IB plus IB on the put. So with a very small risk, this was a good carry trade which opened up higher and went on to make a high of 225. So this is how you can make out what is happening in the order flow. In fact, it went on to make higher highs later in the day. So it can what you can do is you can figure out what is happening on the 30-minute time frame and then take action on the 3-minute time frame, and these signals you will get every time, but you need to be patient. You need to be in sync with what the structure is telling you, and then accordingly you need to position yourself with good risk management. And when you have these processes in place, there is a higher probability of that setup working in your favor. So today you can see how we went on to make these higher highs, and nowhere in the first half of the day we got any IS signals in this put. It was only later in the afternoon where this was showing us some weakness, and when we got below VWAP, and that was when we could have realized that now the auction is back into balance mode. So, and you can see how once we get this IS, it is telling us that there is no more long side play in this put. So the order flow is very clear. We just need to go in sync. Once you get an IS, then you wait for an IB, and you definitely you want this put to get back above the VWAP for more upside. And unless so, this is where you get the IB, you get back into your trade. The IB at VWAP is telling you that you get back into this put. The stop loss would be the low. The high gets triggered, and with this as your low, you stop loss, you book profit at your first target, and then you trail rest to cost, and then it comes back to hit your cost. You're still making money. You can see how it was stalling right at that 225 level for some time, but then we went on to probe lower. So order flow is very clean. It will always keep you in the hunt. It will always give you precise levels where you need to enter, where you need to exit, and it is up to you that you make most out of it. So when you get an IS, you don't look for any short long side trade in that instrument. When the futures and the options are both in sync and they both are giving you the signal at the same time, those kind of setups are which you have to go in fully, because they will give you the biggest reward. So this is the example I wanted to give of the put as well as the Nifty futures. Let us now quickly have a look at the Bank Nifty profile chart before we can wind up. So Bank Nifty profile was a little more bullish, but what we saw last week was some big selling coming in on Wednesday. So we did see the drive up where we took support at this 3-day composite value area low, and we just swiped through. The buyers just went on to drive higher. We swiped through this value, and you can see how the opposite of what we saw in Nifty was happening in Bank Nifty. The K period low was right at this value area high. So this was a drive up. So the buyers were holding. But then what we saw on 19th was some big selling coming in. This HVN which you see 49728 is right where we had the rollover point of the February series. If you guys can recall, rollover of Feb was at 49720. So say similar to the POCs which we have on weekly and daily and monthly and even the yearly, we are bearish below the POC, bullish above the POC. And then futures, we get the order flow. We can see what volumes are coming in at that POC. So I'll take you to the 30-minute order flow chart. In fact, even on the 3-minute order flow chart, the seaside extension showed us a 1500 seller, and we had a trifecta of reds over there on the 3-minute itself. So that was very clearly telling us that the sellers are coming in. So, but what we did for the rest of the day is form a balance, and this K period dip below VWAP took support right at this value. So that the buyers, that was showing us that the buyers are still holding this zone, and we closed as a P-shaped profile. But again, this bounce which we got in the L period saw big sellers coming in into the close. Similar to what we saw in Nifty futures on Friday, we saw big sellers here in the C side and then big sellers again in the L period. So I'll show you that, and you can see that for confirmation in the order flow, because order flow is showing you everything very clearly. There is nothing hidden. So once you see the big sellers are making a base here, so you know that the PLR has changed and you need to look for opportunities to short. Just as the RBI day, we got selling an RS and RS plus IS at the highs. From there, the trend shifted lower. And then after we made these new lows, we formed a balance and we made a bounce. But then again, when we saw re-entry of sellers, we knew now that they're going to test lower levels. So the confirmation they gave us was on Thursday, we formed lower value. Although it was a very narrow range normal profile, it was telling us that the sellers are holding because we were below this POC and these two sellers, and we formed lower value. And although we were still just barely holding on to this value, the 3-day composite value area high, we were not getting that much of demand. The demand was not able to make an extension. So on Friday, when we got this big drive down, this was an open rejection reverse because we opened lower, got back into previous day's range. We made an attempt to get back into previous day's value, but we got rejected. And then we just swiped lower. We went on to form a B-shaped profile. We completed the 80% rule in this 3-day composite, and we got the POC shifted to this 49004. Although this C side held from making any more new lows for the day, the overall structure was shouting that more downside to come. And what we did in Bank Nifty today, we opened lower, we continued to drive down, but the A period lows held. And this, as I showed up in spot, is an important reference. And you can see even in the futures, the values are almost overlapping because we are approaching the settlement, monthly settlement. So 48273 in spot is almost matching with this lows of today. And what we did today, we got back above VWAP. In fact, we made a couple of range extensions higher. We closed this gap and we made an attempt to get into this value, but we were not successful today, and we saw a little quick retracement lower into the close. But still, we are above today's VWAP and POC, and we will need to remain above this value and get back into Friday's value for us to be little bullish on Bank Nifty. Whereas on the downside, if we break below this POC and VWAP, we are looking for the sellers to take back control. So let us just have a quick look at the order flow chart, and I'll take you to that 19th order flow so that we can quickly see those sellers who had come in. So this is that C side on 19th where we saw that trifecta of reds. This 1558 red which you're seeing on the 30-minute was also seen on the 3-minute order flow. So that was an LLT. And he came in a C side. He came right at the rollover point. 49720 was our rollover point. So when you're getting such big selling coming in at rollover point and later in the day, it has not been able to take out, you know that this seller is holding. And then again into the close, you can see how you've got 1106 seller at this 49625. And the next day we opened below that, and on Friday, a lower open got some greens, but this probe higher got rejected at the value of Thursday, value area low. And from there, we saw the sellers come back and we went on to make a B-shaped profile. This POC of 49193 held, although we negated this extension handle, which in Nifty held, but we are not able to take off this POC from the A period. So we formed a B-shaped profile and overall the value was lower. Hence we got this drive down. You can see there are more reds in Bank Nifty at the open, hardly any greens, and it was only towards the end when the POC shifted, toward the end of the A period when the POC shifted lower, is where we were expecting some bounce, because the inventory had gotten too short, it seemed like, and this came at an important reference of that extension handle of 48273 in spot. So from there, once we get back above VWAP, there is no chance of the sellers having any control. So there was no short trade in Bank Nifty after the initial balance was done today, because you can see we remained above the VWAP. In fact, we got a IB30 bar, and it got triggered also for a bit. But then again, in this trigger, you can see there is more red than greens. That is the reason we immediately got back to this POC. So here it is important to see where we stalled. We stalled right at this HVN of 48948. So that will be our reference for tomorrow. And this IB30 would be in place. Similar again, even in Bank Nifty, we will need to match the volumes. Although Bank Nifty rollovers happen very late, it is on Wednesday and Thursday. But because Wednesday is a holiday this week, we can expect some rolls to get shifted tomorrow. So if you see the IB30, so you can see how even in Bank Nifty, the IB30 is not come in this 215 bar, but we have an IB30 at this 1150, and this IB30 is triggered, and we have almost gone on to make the one first target of this IB30. So what we have done today is we will need for Bank Nifty to show some more IB bars. The February series on 30-minute, the Nifty hardly showed IB30s. We had more of IS30s. So that is why the theme for February is more to the downside. So the 30-minute order flow signals will keep your bias right. It'll tell you what the longer time frame is doing, what the bigger players are doing, and you need to be aware about that and look for trades in that direction on the time frame which you are trading. So again, same thing in Bank Nifty futures. Whenever you are watching for big numbers, make sure that you are ruling out that it is not a roll. If you see a big number in Feb, make sure you are watching the similar time in March and seeing, knocking off whether it's a roll or whether it's a entry only made in the February series. So the volumes are still pretty low in the March series in Bank Nifty. So we can expect that to build up tomorrow because of the holiday on Wednesday. So let's see how this goes, and let's be ready. Let's be best prepared. We will have these reports posted up later in the day on the website. So do make use of them, and then make use of the order flow signals which you get for this expiry, and let's try to get the best trades out of the process. So also that's multi-window mode is very important feature. As per your screen size, you can make use of them, the 4-window mode or the 6-window mode, and see different options giving you the signals, especially on settlement day where there is a lot of writing. You can have the couple of put and couple of calls and see when the auction is showing you change of character, and when you can see some writers who can get into trouble with a IB on the 3-minute chart at VWAP in any of the options. So that will be a very low risk trade, and that can give you some good fantastic returns. So in case any questions are there, I'll be happy to answer them regarding today's session. Before I think we can wind up, because we have already taken more time than the scheduled. So let me know in case there are any queries, guys. So I'll just answer them before I sign off for the day. And we are open to suggestions. We are open for to reply to any of your queries, even not asked during the session. You can just mail us at support@vtrender.com, or you can get in touch directly with me on X. My ID is at Uttam Goel, and my DM is open. So you can ping me about any of the sessions, any queries you have of what we cover in these sessions, and I'll be happy to answer you back. So thank you guys for joining in, and let's have a great monthly expiry for February, and looking forward to continue using this process and the wonderful features we have at Vtender to make most of it as traders. Thank you for joining in. Signing off.